Welcome to the daily insights that matter. In an interesting turn of events, the Sensex, the benchmark index of the Bombay Stock Exchange, soared to an all-time high after 7 long months, setting a new record for the Indian stock market on the back of different factors. Let's discuss this. The Sensex hit an all-time high of 63,588 points after 7 long months when it previously reached a high of 63,583 points back in December 2020. On the other hand, the NSE Nifty hit a high of 18,875 points, which is just 10 points away from the highs it achieved in December 2020. So what led to this massive rally? The inflation in the country moderated to a low of 4.25%, closer to the target set of 4% by the RBI, indicating that price pressures in the country were moderating. Additionally, improving fundamentals of GST collections, manufacturing and services PMI constantly being in the expansion zone, as well as auto and domestic air passenger numbers accelerating have all added to this rally. Moreover, a strong GDP growth rate of 6.4% for the fiscal year 24 was another positive development. After hiking the repo rates 6 times since May 2020, the RBI finally took a break in the last 2 meetings, capping the repo rate at 6.5%. This decision was taken by the Monetary Policy Committee on the back of easing inflation and the need to push economic growth. This in turn provided some relief to the investors, which had a ripple effect on the economy. After being net sellers in the first 2 months of this calendar year, foreign portfolio investors continued to invest in the Indian equities for a 4th straight month as they injected a massive 43,838 crore in May and 16,405 crores in June, so far on the back of strong economic rebound and a positive growth outlook. The Indian economy stands at a sweet spot of growth and remains the land of stability against the backdrop of a volatile global economy. Additionally, India stands to be the fastest growing economy in fiscal year 24 and fiscal year 25. Multiple factors like credit growth, asset quality, corporate earnings, GST collections, and the capex pushed by the government, etc. are showing optimism towards the future. The United States administration has granted executive approvals for the manufacturing of F-414 jet engines in India. This decision allows India to gain complete access to the engine technology with no undisclosed aspects. The manufacturing process in India will begin with the sharing of technology starting at a minimum of 50%. As the production cycle progresses, there will be further increment in the transfer of technology. This development between the US and India is a notable milestone for several reasons, as it involves multiple firsts. Firstly, it marks the first time that the United States will share what it considers a crown jewel in its defense capabilities with a non-ally. This demonstrates a significant level of trust and collaboration between the two countries. Secondly, it is the first instance of co-production of jet engines between the United States and a country without a formal treaty. This highlights the willingness of both nations to engage in technological partnerships based on mutual interest, regardless of formal diplomatic agreements. Lastly, the US is sharing a substantial share of sensitive jet engine technology with a provision for the technology transfer ratio to increase over time. This partnership will boost India's indigenous defense capabilities, allowing the country to strengthen its defense industry and achieve greater self-reliance. With that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.